We've got Feroze Azeez, our special market guest, the joint CEO of Anand, Rathi, joining us this morning. Good morning, Feroze. Pleasure having you back here with us on News9. First up, let's begin with the month gone by. The month of October has been a fairly interesting one, perhaps in line with most expectations. But I think one thing that stands out is that the month of October until end of last week saw FIIs had turned net buyers. So first up, what is driving the rally for FIIs? Why do we see the sort of role reversal from net sellers to net buyers?
Good morning, Kartik. Like you said, October, we finally saw some net buying from FIIs.
Yeah.
I think, when does a person buy? When he has oversold it, right? If you look at FY21, which was about just the peak of COVID year, 4.5 years, FII have brought in, whatever they brought in have been taken out. So net flow is almost zero. So 4.5 years of net flow zero in the fastest growing economy. Can that be there for the next 4.5 years? It's anybody's guess, but most people are very myopic, so they don't see beyond 1, 2, 3 months. So you have to ask yourself this one question. In 4.5 years, if FIIs are zero in the next 4.5 years, can it be zero? If your answer comes as zero, then I think we are not the fastest growing economy. So that's point one. It has to reverse. When is the question?
Right.
Point two, FIIs have been net sellers in the futures market as well.
That's right.
In September, October, we touched almost 93% short positions in index futures. Only 7-8% long positions. These are extreme bearish positions built over the narrative of the global uncertainty and the trade war. I think that has to also be reversed. And when one of those days, when the markets on one of the expiries bounced back, weekly expiries, you saw that short covering moved from 93% shorts to almost 77% shorts. That was
Right.
one of the sharpest short coverings.
All right. I'm just looking at some of the data that you had shared, and it's on the screen right now for our viewers as well. The trend seems to be fairly visible that while FPI flows have been in the negative for this calendar year, the inflows coming by domestic investors, the mutual funds, the AMCs have far surpassed what we've seen as outflows on FPI. So is it fair now to say that honestly, the Indian investors and the Indian markets are unfazed by what happens globally and how global investors react because the domestic momentum is strong enough to deal with practically anything that the FPIs do?
No, Kartik. I think that question has a different answer at different points in time.
Right.
Are we agnostic to the market? After a lot of selling, we are. After a lot of buying, we are not. What has transpired over the last 1 year is we have relaxed. The rest of the global markets have done well. We've got a 1-year time correction, 11 years of earning correction upwards, a price correction of 3-4%. After that, you can't have negative news creating an impact of a 5-7%, 10% fall. Markets always fall. Look at any big 10, 15, 20% falls. They've always succeeded a large rise. After a flattish market, large fall has to be driven by something very, very catastrophic like a nuclear war or something. That's point one. Point two, like you've put on the screen, the DII flows. Again, if we go to the balcony and then look who's dancing well, from the balcony you get to know on the dance floor who's dancing well. DII certainly are. For the same period of 4.5 years, DIIs have put in 15 lakh crores of inflows. And in my estimate, in the next 8 years, you will see at least 50 lakh crores of DII buying. In a market where only 34 lakh crore is the free float of 524 stocks of MSCI small cap. 50 lakh crores is the minimum estimate of DII inflow over the next 8 years. It could also be 70 lakhs, 80 lakh crore. And if somebody can get this hypothesis tested, and if he or she also comes to the same result, he cannot be bearish India from a long-term standpoint.
Okay, and I think the month of October also spelled some good news, at least for Sensex and Nifty, as far as their 1-year highs is concerned. Both the indices actually touched their 1-year highs, and now many are anticipating that by end of this year, they could reach their lifetime highs as well. Are you on the same page? Do you think whatever wrong could happen with the markets has happened, and from here, as far as at least all the geopolitics and geoeconomics go, India and EU signing a trade deal, India and US on the verge of hopefully signing a trade deal, now things will only look better from here?
See, there's nothing like only better. One answer definitely I look for. I don't think, I generally don't pursue an answer which is difficult to answer.
Okay.
I only pursue only one answer. Is there a fall of more than 15%, 10% expected in the market?
Is
And
it
what would be
expected?
the... Not at all.
Not at all. Okay.
That's the 99% probability, no.
Is a rise of 4 to 5% potentially expected, given that diplomatically things seem to be now in the right direction, hopefully?
Yes, I think if diplomatically things get solved. See, FIIs have one clear attribute which I have tested from all four directions statistically. They are price inelastic.
Right.
What I mean by that is when they buy, they don't care about what the price they're buying it at.
Okay.
Okay. And this might look like a very difficult hypothesis to believe. Per unit price change of every rupee invested by FII is significantly more than that of a DII.
Right.
DII is very, very price sensitive.
Okay.
एक स्टॉक खरीदना है 1000 पे खरीदना है, वो 1005 पे नहीं खरीदता है.
Right.
ईवीएम पे फंड मैनेजर ज्ञान बांटता है, लॉन्ग टर्म में ले खरीद रहा हूँ, बट 5 रुपए पे भी वो डील छोड़ देता है. That's what I hear from institutional brokers. So I personally think when FIIs come back, they are not going to be price sensitive. So is there a sharp rally expected if FIIs were to come back? And if, like Kartik's prediction, if things calm down globally, FIIs buy. If FIIs buy, then I'm not looking at 2-3%.
All right, just a disclaimer here, absolutely no prediction, just going by what we are reading and discussing that with Feroze. But I want to also talk about the earnings season, and Q2 has been a bit of a mixed bag, especially if you were to compare the Nifty 50 IT companies with, let's say, a Coforge. And also, the FMCG sector in Q2 has not sort of lived up to expectations. So, are you more optimistic of Q3 numbers, given the fact that the Diwali sales, the GST impact, all of that is going to be visible in Q3? Are you a lot more bullish about Q3 numbers? And given Q2 earnings and it being a mixed bag, again, in line with expectations, or was there something absolutely worrying that you picked up, at least in the month of October?
No, I didn't. See, when you look at results quarter to quarter across different sectors, Nifty constitutes so many sectors and subsectors. So how we look at it is, does each quarter enhance or reduce the probability of our earning estimate for the year? If my earning estimate is to expect the earnings of Nifty to again grow by double digit like it grew last year. It grew last year also double digit, but most people will tell you otherwise because they don't factor in the 4 changes which Nifty had last financial year. This year, we have an estimate of 11 to 12% Nifty earnings growth. I think quarter 2 has not dampened the earning estimate for this year by even a bit. So I think quarter 3 will just solidify 11-12% growth in Nifty earnings for FY26.
All right, and let's also talk about the events which are expected to unfold this week, Feroze, and it'll be great to have your input on that. Of course, the Q2 season continues, the earnings season continues, but also globally, you have the US Fed Reserve meeting outcome, which is expected to come out on the 30th or 31st of this month. Then, of course, Commerce and Industry Minister Piyush Goyal is in Brussels discussing, thrashing out those final contours of the India-EU trade deal. And, of course, expectations are also running high on the India-US trade deal to be announced, though many skeptics believe that perhaps the India-US trade deal may not be announced until at least the Bihar elections verdict is out. And of course, the big day today, Feroze, also happens to be the IIP September data, which is expected to come out at about 4 o'clock or so this morning. So this week, a few events likely to shape the mood of the markets. Any of them that sort of pick your interest as the must-watch events, which will, one way or another, determine the outcome of the market mood this week?
Yes, Kartik. This week, I think we have several important events. How we look at events is, for the week, if there are events, or for the month there are events, we try and see how is the market poised. Is it going to amplify a good news or amplify a bad news? We are in a trajectory or a current contemporary situation implies that any positive news will get accentuated, but negative news will not get accentuated. Because that's how markets are poised. DII is sitting on cash, FII is short in futures, FII is already short in cash market, and retail margin funding books are light. So I think positive news, if any, will get accentuated. So sitting on shorts may be a risky strategy.
All right, so don't sit on shorts is the view coming in from Feroze Azeez. Feroze, I want to now move to market action, at least that we are witnessing this morning. Reliance Industries is up about 1.3% at a time when ONGC is down about 0.6%. One would have expected that the sanctions on the Russian oil giants, both Lukoil as well as Rosneft, would not augur well for Reliance. But the statement coming in that Reliance is going to comply with EU norms and in fact UK, EU, US, all three not willing to buy the processed Russian oil, and now sanctions. Overall, what do you make of Reliance Industries? Why is there some optimism visible on the screen this morning?
See, Kartik, not specific to Reliance. What I've realized is generally when there is some news which comes on a certain topic for a specific stock, the shareholders who are short-term exit very, very quickly if there's some bad news. So what happens is every share has about 3, 4, 5% of free float floating around with these people who've been pende ke lote, as we call it in Hindi. So whenever there is a bad news like this and uncertainty, those guys go out. And when the uncertainty actually transpires, you see a positive move because the uncertainty is behind us. So that's how when news breaks, then it becomes a dead horse being flogged. So I think that's why you see a positive reaction, because the frothy shareholder, that's what it implies, that the stock is prepared for the next leg of move when genuine shareholders who are long-term come into the picture.
So do you think that the scared investors have done their bit of selling on Friday when the news came out on Thursday, and now there's more of a consolidation and hence you're seeing a little bit of a build-up this morning?
Absolutely. If you see delivery volume, it will tell you some degree of testing of the hypothesis which is laid on the table.
I want to shift focus to the IT sector, and Feroze, quite a bit of divergence there. Look at earnings from Coforge, and obviously in line the stock is up about 4% or so. Infosys, which is likely to announce its dividend today, the stock is down about 1%. But overall, we've seen, of course, barring last week when you saw a bit of a rally in the IT sector, this entire calendar year, ever since President Donald Trump has come into power, the IT sector, especially the Nifty 50 IT stocks, have been very, very pessimistic, whereas we are seeing much better outcome coming from the slightly smaller IT stocks like Coforge and Persistent Systems. Overall, let's assume for one moment that the India-US trade deal in whatever shape or size does go through. Is it going to have any impact whatsoever on the IT stocks, or do you think the IT stocks are now in a completely different zone because tariffs are on goods, not exactly on services? There's a lot of data which has not been released by the US given the lockdown, the shutdown of the government. And do IT stocks tend to move in direction of India-US trade talks, or it's something else at play completely here?
Kartik, I think the divergence, if you look at year on year, the divergence of performance in the Nifty IT between the smaller and the mid-cap stocks and the large ones is significantly more than in other sectors. Why? Because IT sector's expectation of a shareholder's innovation and agility. When things are good, of course, innovation and agility is going to be more in the smaller businesses. When things are bad, resilience of a business model is skewed towards the larger businesses, especially the Nifty 50 constituents of Nifty IT. So I personally think, depending on what's your perspective, if it's a 3-4 year perspective, then I think mid-cap IT will do more justice to what that sector has to offer for a business as an opportunity.
All right, Feroze, we will leave it at that this morning. As always, pleasure having you here with us on News9.